Okay, hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Yongshen. With me here today, we have Trent, one of our product specialists. Hi Trent, how are you doing today?
Yeah, I'm feeling good. I'm more excited to be back here today.
Okay, good to hear that. So for today's podcast, we will be discussing about the dividend stocks in US market and how can the investors benefit from this fall. Once again, I would like all of our beloved audience today to share this video to all of your friends. The more people are watching this video, the more we are motivated to deliver greater content to all of you. And without further ado, let's jump into our topic for today. So my first question to you, Trent, the S&P 500 and Dow Jones indices have dropped more than 10%. Do you reckon this downtrend will continue given the Fed rate hike by 0.75 percentage point last week?
Okay, so in my opinion, right, the downtrend in S&P 500 and Dow Jones will likely to continue mainly due to a more expected rate hike from the Federal Reserve. And also given the Federal Reserve aggressive stance and the likelihood that inflation moves little over the next month while job creation remains firm, the Fed is expected to at least hike 75 basis points for a fourth consecutive time in the November 2nd FOMC meeting. While in the December FOMC meeting, hopefully we can see clearer signs of moderating price pressure on the lead indicators, but I foresee that the weaker activity data may not be enough to convince the Federal Reserve to move cautiously. Hence, there might be another 50 basis point cut in December, which would leave the target range around 4.25 to 4.5% in interest rate. So I foresee based on the estimation, I foresee the S&P 500 and Dow Jones will continue to drop further as Federal Reserve continues their rate hike.
Okay, yeah, Fed rate hike actually has a very huge impact on the market. So with $1 million question, so whether now is it the right time to buy the growth dividend stocks?
The answer is definitely yes. As stock prices will continue to drop further, many solid companies that pays out dividend regularly will become more attractive due to the higher dividend yields. While some may argue that bonds are also looking attractive with higher yields at the moment, good dividend stocks is still better in my opinion, as it provides a two-way upside to investors in terms of dividends and also capital appreciation when the market recovers.
Okay, so yeah, now is a good time to buy the growth dividend stocks. And what do you think is the next best stock to buy if the investors are aiming for the dividend payout?
Okay, there's usually a few dividend stocks in the US market in my mind currently. So the first one is Lowe's. It's actually a home improvement giant, which may not seem as an exciting stock uh, unless you are looking for dividend growth. Okay, the company actually raised its dividend every year since going public in 1961 and has raised the payout a massive 471% over the past 10 years. Another important number that good for the lows is the average US home is 37 years old. So the next generation of DIY will spend a lot of money at Lowe's. And the next stock is Walgreens Boots Alliance, is one of the largest retail pharmacy operators in the world. So Walgreens is actually undergoing massive turnaround currently. Its actions are already lowering costs, increasing digital sales, and maybe most importantly, adding full service healthcare clinics in hundreds of its retail locations. Becoming a more integrated healthcare company is helping to make this profitable company even more profitable, fueling its already generous dividend to even higher levels. Okay, with a dividend yield of well above 4.5% and 6 decades of annual payout growth, there's actually a lot for dividend investors to like about this stock. And then the last one I would recommend is the Johnson & Johnson. It owns one of the portfolio of excellent brands that makes products that people recognize mostly, which is specifically healthcare items. In addition to its Band-Aid, its notable brands such as Band-Aids, Neutrogena, Tylenol, C-Track, Benadryl, and Johnson's brand, among others. Johnson & Johnson has massive and steadily profitable operations in pharmaceuticals and medical devices. The combination which has allowed the company to increase its dividend for 60 years in a row. Okay, this diversity across consumer, health brands, pharmaceutical and medical devices is unmatched and has proven to be a massive profit engine. But one thing to note on Johnson & Johnson is that the management thinks that this conglomerate structure has limited the company's ability to focus its resources and announce plans in late 2021 to actually split the consumer product business into a separate company. So this split actually expected to happen in 2023 with existing shareholders receiving shares of both families. But however, in my view, this company will continue to provide a great investment opportunity to all those dividend stocks investors.
Okay, so in your opinion, you would pick Low, Walgreens Boots Alliance, Johnson & Johnson for the next best stock. So what are the upcoming events that traders should look for in the coming weeks in terms of dividend for the stocks market?
Okay, so there's a few things. Traders should look out for the upcoming FOMC meeting on 13 October for more in-depth insights into the current inflation in US and also the vote of each various member and how they view the market currently. And at the same time, also the monthly US CPI data is also released on the same day itself. So if the CPI number are higher than expected, we may see some bearish knee-jerk reaction in the stocks market and potentially giving opportunity to investors to average down on their position.
Okay, so investors need to take note on two upcoming events, which will be FOMC meeting minutes on 13th of October and also the money US CPI data. Okay, so thank you for sharing trend, and I hope that it will help all the investors out there with your insights that you have shared with us today. And other than this, I have one very exciting news to share to everyone. So starting from 1st of October, we will be running a shares trading promotion. Open an account now to receive a 100 ringgit touch and go below PIN, and also trade foreign and local shares as low as 0.08%. So if you are interested to know, you can directly visit our website or you can directly contact us for more information. We have come to an end for today's podcast. If you have any questions or any topics you want us to discuss next week, you also can comment in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time too, Trent.
Thank you. Bye-bye.
Thank you. Bye-bye.